Good afternoon, or really good evening. I wanted to do another video on the supply demand for the real estate and the market that we're experiencing. This one talked more about appreciation and recessions. This first graph here shows median price values from the 50s, 54, all the way up to today. As we all know, prices have accelerated immensely here lately. But you can see there's been uptrends basically the whole time, except for our crash recession in the real estate market we had in '08 through 10, 11 or so. I also pulled up a list of the recessions, kind of going back in recent memory in the 70s, 80s, early 80s, had a couple, 90s, early 2000, and then here's the Great Recession, they call it. In 7, 8, 9, they're saying it only lasted a year. And then our COVID one. So I don't know if a lot of people knew we've had this many recessions, but they, go on for certain periods of time before the economy recovers. And it talks about how the GDP changed, what the unemployment rate was, how long since the previous recession. So one, just to share that, but really the impact to the values, haven't really impacted the values. Values still increase. Obviously, just our one exception with that 8, 9, then values dipped further after that, and then started coming back up in 2012. That's definitely a rarity, as you can see, with all the recessions we've had. Recessions that lasted longer. A Great Recession, they said was 1 year, 6 months. Back in the early 80s, one year, 4 months. 6 months. So you generally last less than a year. They even said the COVID one was only 2 months. I think we all agreed it took a little longer, lasted a little longer than that. But yeah, I wanted to show that. One other thing that can show that a recession may be coming is the difference between the 10-year yield and the 2-year yield. So I've talked about the 10-year yield before, and to follow that and kind of shows what mortgage rates will do. Here the difference, if there are times when the 2-year yield will be more than the 10-year yield, and that shows here is a negative number. So you can see in the 80s when we had that recession, there's a huge difference between the 2-year and 10-year. Typically the 10-year is more, so that's when the line's above, and dipped down here, in the 90s. So that followed that recession. 2000s, that recession. Here's the two right before, leading to the 2007, 8, 9 recession right here. And then COVID. Here it didn't quite cross over, but they did equal each other. But we're heading back down towards that again. So a lot of people I'm hearing, they're talking about could another recession happen. So I think it is possible because inflation's so high. Fed took a while to increase short-term rates. And as they continue to do that more, we will see the short-term rate get higher. We'll just have to see if that brings down inflation, or at least moderates it to affect the 10-year yield, if that will come underneath the 2-year. So anyway, I thought it was interesting to see the price value still continue to rise, whether there's a recession or not. I think that trend will continue. It may not be as steep going forward as inflation comes down, but it's still going to definitely be in an uptrend. So if you're in the market to buy, now it's still a great time. Rates still are historically low, even at 4.5%. But if you have any questions, let me know. Thanks.